Hey, everybody. Hello, hello, hello. Welcome to today's Run It Up Wednesday. Hello, hello. I am on YouTube over here, and I'm on Instagram over here. So, what's up, Instagram? What's up, YouTube? I'm going to wait till some of y'all get in here, but you're going to want to get in this room because we're talking about how we're going to get some passive income and get rich. And I'm going to teach you guys all about it, all what to do. Okay. You're going to want to make sure that you have a pen and a paper today. This is going to be a workshop. I'm going to be teaching you all how you can get rich with AVGO stock. I'm going to teach you. This is a class for beginners. Okay. I'm over here on Instagram, and I'm over here on YouTube. Okay. So if you see my eyes moving back and forth, that's because I'm on two different devices and I'm talking to both folks. Okay. If you're watching from Instagram, do me a favor and say, what's up? Say, hey, give me some love, give me a wave, give me a heart or something. If you're watching here on YouTube, I want you to do the same. Give me some love, give me a heart, give me a comment. Let me know where you're coming in from. Both of you guys, Instagram and YouTube. Let me know what city or town or country you are watching from, because I want to know who I'm talking to. Okay, I want to know who I'm talking to, and I want to make sure that you are getting all of this goodness. Okay. Again, I'm going to give you a little bit of time to go get some paper, a pen, or maybe another device where you can type this information in, because you're going to want to know this. Now, again, this class that I'm teaching right now is for basically beginners or people who are relatively new to investing. Okay. If you're a seasoned investor, you probably already on top of AVGO stock. Okay. You probably know all about it. You probably ain't worried about it. You probably already invested in it, probably, if you're a seasoned investor. If you are brand new, you very likely are like, what is this? What is she talking about? How can this make me some money? Okay. So I'm going to go ahead. I'm going to get into it. If you are new to investing, do me a favor and drop me a 1 in the chat. If you're on YouTube, drop me a 1. If you're on Instagram, drop me a 1. Okay. If you are seasoned, if you've been investing for a while, I want you to drop me a 2. All right. 2 if you have been doing this for a minute, if you know what you're doing, all of that stuff. So 1 if you're brand new, 2 if you are seasoned at this game. Okay. Go ahead and drop those numbers for me in the comments, so I know who it is what my audience is today. Because sometimes I get some seasoned folks on here, and sometimes I get some newbies. But either way, we're gonna be talking about AVGO stock, which is essentially Broadcom. Okay, Broadcom. Hey there! Aw, hey from Pakistan. What's up, Azure Graphics? I know you. Very interested in the insights that I will give now. I appreciate you coming in from Pakistan. Look at Pakistan. We worldwide, baby. Worldwide, worldwide. I want to make sure you can hear me on can you hear me on YouTube? Let me know on YouTube if you can hear me just fine. I think Instagram can hear me just fine, but YouTube, the audio isn't telling me that it's like super loud or anything, or that it's good. So let me know if you can hear me. Okay. Okay. Kayon says you can hear me. Thank you so much. Thank you for engaging. I appreciate that. Okay. All right. So we got Pakistan. We got where are we at in on YouTube? Where are you guys calling in from? Where are you guys calling in from? All right. All right. So first of all, why are we even having this conversation? Okay. We're having this conversation because I told y'all last week, I got on here in my good clothes, and I told y'all that Nvidia was going to split, right? I told y'all Nvidia was going to split. I got somebody calling in from Grand Rapids, Michigan. Hey, my Michigan peeps. I'm in Michigan too, as you probably know. All right. I told y'all Nvidia was going to split 10-1. I'll explain what that means for those of you who don't know in a second, okay? Nvidia was going to split 10-1. And that meant that whatever the price was for Nvidia on Friday before they closed, that Monday, they were going to be 10, it was going to be divided by 10. So if the price was $1,200, which it was around there, it was going to be $120 on Monday, which means that as a brand new investor or even an unseasoned investor, you had the opportunity to get in at a much lower price. This is very, 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 very good. Okay. This is great. It's great for people who already have the the stock, and it's great for people who are just coming into the stock. And I'll explain why in a minute, because a lot of people tend to think that when a stock splits, they tend to think that that means that the company's doing bad because they're lowering the price. That is not the case at all. Usually when a company splits a stock, the company is actually doing well. Their stock is way, 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 way up. Okay. So that's actually a good sign if a stock is splitting. Okay. Hey from Louisiana. Hey from Grand Prairie, Texas. Hello. Again, I'm talking on Instagram over here and I'm talking on YouTube over here. So my eyes moving back and forth. That's what's going on. Okay. What's up, my YouTubers? I'm so excited that you guys are here. Instagram, I'm glad that you guys are here as well. What's up, Danny? Yes, you are finally here for a live. Hey girl. Hey, what's going on? All right. So we got quite a few people in the room over here on YouTube now. So I want to make sure that I run this back real quick for you guys, because again, go and get yourself a pencil and some paper, because this is going to be important. If you're watching on replay, no worries. I realize some of y'all might be at work, but you're going to want to make sure that you get this information, okay? We're talking about AVGO stock. Hey, Sharon from Illinois. What's up, Lynette? Hello from Louisiana, Charlotte. All right, so AVGO stock. Write this down, AVGO. The company whose stock ticker this is Broadcom, okay? Broadcom is the company. It is a technology company, software company. They're really, really heavy into AI. Okay. As we all know, AI is really big right now. So you can imagine that it probably makes sense that this company is doing pretty well. Okay. Now, let's talk about stock splits, because I realize most of you guys are probably relatively new, okay, to this. When a stock splits, first of all, let's talk about why stocks are even offered in the first place. Okay. Stocks get offered on the stock market because the company that's offering them wants to raise money. That is the whole point of stock being on the stock market, is because the company that's offering it wants to raise lots and lots of money, millions, billions, trillions, even possibly, of dollars. And so in exchange for us, as what we will call ourselves retail investors, we are not institutional investors. Institutional investors are like companies they're investing on behalf of large corporations. Okay. We are investing on behalf of ourselves. That makes us a retail investor. Okay. Retail investors such as you and I, and institutional investors as well, we buy the stock, right? And in exchange for buying shares of the stock, and giving them the money that they need to raise in order to grow their company, for research and development, for just expansion, who knows what they want to raise it for, right? They give us equity, which means that we own a part of their company, right? So we are literally owners. So a really good thing, this is kind of a tidbit, a really good thing to do is if you are someone who goes to Starbucks a lot, you may want to consider investing in Starbucks, right? It makes sense to own the companies that you spend money with, right? Like, why not, right? As long as that company is doing well. What's up, Nefertiti, calling in from Mississippi? So excited to see you. I see New Jersey here. I see Illinois. We got the whole world up in here. North Carolina. Okay, so that's why companies get on the stock market in the first place. Okay, when a stock splits, that generally means that the stock has gotten so high that it's cost prohibitive for. Oh, Sharon said, am I saying AB or AV? A as in apple, V as in Victor, G as in girl, O as in octopus. Okay, so AVGO. Thank you for asking, Sharon, because somebody else probably had that question as well. All right. So when a stock splits, generally the cost of one share of the stock has gotten so cost prohibitive that normal retail investors such as you and I are not going to be able to invest in it, right? So if a stock is like, $3,000, which is the case with Chipotle right now, is over $3,000, right? And we'll talk about Chipotle splitting in a minute because they're about to split too next week, okay? When a stock splits, it's cost prohibitive beforehand for most people to invest. And so therefore, to make it, because again, their whole purpose is to raise money. They're not splitting the stock just because they have nothing better to do and because they just feel like being nice, right? They want to make it more advantageous and easier for the average retail investor to come in and be able to give them money to help grow their company, right? Well, if the stock is $1,500 or $3,000 a share, $5,000 a share, like the vast majority of retail consumers are not going to go and invest in a single stock of that share of that company. However, should that stock split and become lower, now it becomes advantageous and we can actually do it, right? Okay, so in the case of AVGO, which is Broadcom, again, Broadcom is a stock that is a company that makes software. They do all sorts of things, but they're really heavy into AI. Okay. I told y'all last week, I told you, and I hope y'all listen to me. I know a lot of you did. Some of y'all was like, I'm going to have to pump the brakes. I'm a little scared, but I got to tell you, scared money don't make money. Okay. Scared money don't make money. But I told y'all Nvidia was going to be up. I haven't actually had a chance to look at Nvidia today, but if you invested in Nvidia on Monday last week when it split 10 to 1, I'll explain what that means. When it split 10 to 1, you would already be up 12% in a week. In a week, you would have been up 12%, right? Now, of course, the stock market goes up, stock market goes down, it goes up, it goes down, right? But by and large, the stock market has returned over time 10% returns over time. And Nvidia is already up 12, right? So if you invested in Nvidia, good for you. If you didn't invest in Nvidia, you still have the opportunity to do so. It's still lower than it normally was. The Friday the Friday before it split, Nvidia was trading at $1,200 a share, which again is too much, right? Like who's gonna do that, right? Too much. But when it split 10 to 1, that means it got divided by 10. So whatever the share of the stock was, it got divided by 10. So if it was $1,200, it was $120. Okay. If you got in at $120, now you could buy 10 shares of that stock for the same price that you could have just 2 days prior have only gotten one. Okay. Now you might ask, okay, well, what happens to the people who already have the stock? They are at a benefit as well, because once the stock splits, the cost splits by the amount that is splitting by, so 10 in this case, but also the number of shares you have doubles, right? So for example, if you had one share of Nvidia prior to the split, once it split 10 to 1, you actually now have 10 shares. Okay. Hopefully that makes sense. I don't want to lose anybody. So make sure that you let me know in the comments if you're confused. Okay. So the price gets divided by the split amount, which is 10, but it gets multiplied, but the number of shares gets multiplied if you already have it by the same amount. If you are watching me on YouTube, I need you to make sure that you hit that subscribe button, because I'm gonna be here every Wednesday giving y'all the game. Okay. Every Wednesday at noon. Running up Wednesdays. We running up the bank accounts, we running up the stocks, we running up our passive income. Okay. Danny, I'm so excited to hear that you invested in Nvidia. I'm so excited to hear that. I love it. I love it. I don't care if it's a little bit or if it's a lot of it. I'm so proud of you for getting in. If you got in on Nvidia when I told you guys, let me know in the chat. Okay. Kudos to you. All right. Passive income. That's what it's all about, right? Also, do me a favor and hit that like button here on YouTube and on Instagram. Hit that like button, right? Because we want the algorithm to do this thing, and we want to send it out to everybody because we want everybody to get in on this. Okay. So again, if you haven't subscribed, click the subscribe button. And if you have not liked this, make sure that you press like and share it as well for me. Okay. All right. So I hope I'm not confusing you guys. So Avgo, AGVO, is splitting on July 12th. Okay. So y'all got a little bit of time to get your coins together. Okay. You got a little bit of time. Yes, Adina bought some Nvidia stock. You are so welcome, girl. Yay! I love it. All right, so I'm glad y'all are listening. Okay, so AVGO is splitting on July 12th. Now, when I told y'all about Nvidia, y'all only had like 3 days to get it together. Okay, but with this one, you got a little less than a month. Okay, so you got a little less than 30 days to get your coins up so you can do this. And if you don't have any disposable income to invest, that's okay. I'm actually going to tell you how you can invest with maybe your retirement, any Roth IRAs you might already have, like other places you might already have money. Okay. Even if you have your child's college savings, right? You can invest in any of these stocks with those. So you don't necessarily have to come up with brand new money. You can use money you already have, which is a great thing. Okay. All right. So splitting on July 12th. All right. So I explained how stock splits work. I also want to make it clear that a stock splitting is not a indicator that the company is doing badly. It's actually an indicator that the company is doing fantastic, because no company that has a stock trading at like $50 is going to split, because that price is generally accessible for most people, right? They're not going to split their stock if their price is $50. If their price is $2,000, then we talking about, well, we might split. If their price is $500, as in the case of Microsoft, oh, we might split. If we're talking about $3,000, $3,400, actually as of yesterday, which is the case with Chipotle, now we're talking about splitting, okay? Because again, the companies want to raise more money. And so in order to get more investors in and to get current investors to buy more, they're going to then offer at a lower price. Danny said she had her mom and sister buy some too. Yes! For all of y'all who are here from the Naturalicious Nation, let me know in the comments that you are here from the nation. I'm so glad. Like, I helped y'all with y'all hair. I still help y'all with your hair. Now I'm helping you with your money. Like, we getting it all together, right? We're going to be fine and we're going to be rich. I love it. I love it for y'all. I love it. I love it. I love it. Let's go. Okay. All right. If you are in the Naturalist Station, let me know in the comments. Okay. Cohort 3 says Sharon. All right. What's up? Okay. So, I'm actually reading this from Investopedia because I want you to hear this. Okay. This is important because it does not mean that the company is not liquid. It says stock splits can improve trading quality. Stock splits can improve trading liquidity and make stocks seem more important. In a stock split, the number of outstanding shares increases and the price per share decreases proportionately, while the market capitalization of the value of the company does not change. So all that to say that the company is doing very well, right? And it actually makes the company more liquid because more people can get in on that stock. And again, the whole point of being on the stock market is to raise money for your company for various things that you want to do as a company, such as research and development, such as hiring new people, such as expanding into new territories, expanding into new retail streams. You know, who knows, right? They want to raise this money. And so it makes it more liquid. So this is a good sign if you see a company splitting. Do not think that this makes it bad. Gabrielle, we are not talking about crypto today. This is actual stocks on the stock market. Okay, stocks on the stock market. Definitely not crypto. We're not talking about crypto. Crypto, you can be up one second and be down the next second and lose all your money in crypto. We're not talking about crypto. We're talking about stocks, actual stocks, tried and true stocks that have been on the stock market forever. So that's what we're talking about today. Good question though. Okay. When it comes to people who already own the stock, like I said, it's going to double not double. You're going to multiply the amount of the split by however many shares, right? So if you own 10 shares and the stock splits 10 to 1, you're then going to multiply your stocks by 10. So if you own 10 stocks, you're going to multiply that by 10. So now you have 100 stocks. So why is that good, right? This is really how people really, really get rich in the stock market. Because a lot of times we think about, oh, we're just hoping that the stock price climbs. But that's not the only way that people make money in the stock market. They actually make money when the stock climbs and also when the stock splits because of this. So let me give you an example. Let's say you own 10 shares of a stock. And I'm going to do some math here. Okay, I'm getting my pen out. You own 10 shares of a stock. And that stock, you bought that stock at $10. Okay. That means that 10 times 10 is 100. That means you would have spent $100 when you bought that stock. Okay, when you bought those 10 shares. Okay, you follow me? Let me know if I'm not following me. I want to make sure y'all got it. Okay. Once that stock splits, let's say that stock ends up going up to $1,000, and the company is like, okay, we got to split. We're going to split 10 to 1. Okay. You still own those 10 shares at that point, right? But now your 10 shares instead of $100 are worth $1,000 a piece. Okay. So now you own $10,000 worth of shares. I'm sorry, $1,000 worth of shares. Okay. Follow me. So you bought it at 10. You bought 10 shares at $10. You had $100 that you spent. You didn't put any more money in. Okay. And then the stock went up to $1,000 a share. Okay. 1, 2, 3, 4. I'm sorry. Yeah, I was right. So now instead of 10 shares at $10, you now own 10 shares at $10,000. You made $10,000 from a $1,000 from a $100 investment. Okay. Now let's say that stock splits. You still own 10 shares. Okay. That stock splits. Let's say it splits 10 to 1. Okay. So that stock is going to split 10 to 1. So instead of $1,000, the stock is going to be $100. Okay. So we're dividing by 10, right? The stock is now $100. So you now owe 10 shares at $100. But because you already own the shares, you're actually going to multiply by 10. Okay. Follow me. Now, instead of 10 shares, you now own 100 shares when the stock splits, and the stock is now trading at $100, right? So you own 100 shares at $100. You only put in $100. So now you own 1, 2, 3, 4. You still own 10. You still have $10,000 in your bank, in your stock account, okay? Because it's the same amount, just the math is different, right? It's still $10,000. Now let's say that same stock now runs back up, but you have 100 shares now. That same stock runs back up to $1,000. So now you have 100 shares at $1,000. 1, 2, 3, 4, 5. You just made $100,000 when you only invested 10, but you didn't put in any more money. You only invested 100, but you didn't put any more money. That's how people also make a lot of money on the stock market, is during those stock splits. So I have a friend who invested in Apple in the very early days. Okay. She invested in Apple. She invested like $1,000 into Apple. She had the foresight to do this. Okay. Because of all the stock splits that Apple has had and the price running up, her portfolio of just Apple, but she has other stuff, but just Apple alone is multiple six figures, but she only invested $1,000. Okay. So this is a long-term play. Okay. This is why this is important. Okay. It is on Robinhood, Donna. Yes, it is. Yes, it is. Avgo is on Robinhood. Thank you for asking. It's on Robinhood. It's on Fidelity. It's on Charles Schwab. It's on Moomoo. It's on all the brokerages. All the brokerages. It's on Stash. All of them. It's even on Cash App. Okay. All right. Now let's talk about Avgo stock. Okay. Avgo, last year the revenue was $35.8 billion. Okay. Now, if you didn't get in on Nvidia when I told y'all to, Avgo is your second chance. You can still get in on Nvidia. Okay, you can still get in on it, but Avgo is your second chance because currently the stock is trading at $1,800 a share. When it splits on June 25th, assuming the price is still around $1,800, it will now be $180 a share. Okay. If you cannot afford to spend $180, if you cannot afford to buy multiple shares, it doesn't matter. Just get in what you can. Something small is better than nothing. You're going to make exactly $0 if you invest nothing. But if you invest something, you are going to make something. Okay. And I'm telling you, AI is hot right now, and the stock is going to run up. It's going to run up. Just like Nvidia is going to run up, this stock is going to run up too. Okay. AVGO. Now, keep in mind, just 2 days ago, Broadcom was trading at $1,735. And today is already over $1,800. That's 2 days later. Okay. Yes, the day the stock is going to split is July 12th. July 12th. Thank you for asking again, Nefertiti. The stock is going to split on July 12th. So again, you have some time to get this together. Okay. So I did some research and I have my notes here. So I want to make sure I get all the numbers right. All right. So a year ago, listen to me. This is why I'm telling you this stock is the stock. If you didn't get in on Nvidia, this stock is the stock. I'm going to tell you in just a second, Sharon, how to invest. Thank you for asking. All right. Currently, the stock is at $1,800. A year ago, this time last year, this same stock was $847. 1 year ago. It was $1,000 cheaper a year ago. That means that if you had invested $2,000 then, you would have over $4,000 now in just a year. You would have doubled your money in just a year without doing a single thing. Talk about passive income. Talk about sitting on your butt, living, loving life, and just making money, right? All right. If you had invested 5 years ago, which was 2019, okay, you would have invested $2,000 hypothetically. If you put $2,000 in 5 years ago at $287 is when it was what it was trading at 5 years ago. You would have $12,000 now. You would have made $10,000 doing nothing, chilling. That's if you had only invested $2,000, right? Now, if you had invested in 2009 when they originally went public at $16.43, if you had the foresight to say, hey, I should invest in this now, and you invested $2,000 in, you would have $212,000. 2009, like that wasn't even that long ago. That was just over 10 years ago. It was 15 years ago. In 15 years, you would have taken a $2,000 investment and done nothing else. Say you never invested another single dime, and you would have you would be at $200,000. And that's before any stock splits. Like crazy. Absolutely insane, right? I know, Nefertiti. Wow. Tanya, I'm gonna teach you. I'm gonna tell you how to invest in just a minute. I'm glad y'all are asking because you need to be on this, okay? So this is what I'm talking about. Like, here's the thing, and I say this for all my people, right? All my people. 10 or so years ago, well, really 20 years ago, let's say 2000s, early 2000s, okay? It was, there were gatekeepers. There was red tape. Like you could not just be any old body and invest in the stock market. You had to have a broker. If you remember the Cosby Show, Bill Cosby or Cliff Huxtable used to always tell the one little boy, you need to call your broker, right? Remember that? And it was like always a joke or whatever. So you had to have a broker. You had to have some sort of knowledge of getting in on Wall Street. You had to have somebody, you had to pay that person a fee to trade for you, and then cross your fingers and wish on a hope and a prayer that they were going to do well with your money. You could tell them what to do, but it was really on them to take care of your money for you. The best person to take care of your money is you. Okay. Nobody's going to care about your money as much as you do. Nobody. I don't care if you're paying them or not. Nobody's going to give a rat's behind about your money as much as you do. Okay. So you got to take care of yourself. So back then we didn't have this opportunity. Okay. When Microsoft went public, when Apple went public, even when Facebook went public in the early 2000s, I remember being at the gas station, looking at it on the newspaper that was by the door saying, oh, wow, I wish I could buy Facebook. I didn't even have no money. I don't know how I was going to probably buy like 3 shares. I don't know how much it was going to be, but I was going to buy something, but I didn't know how. This was like early 2000s, like maybe 2005. Like you could not just buy stocks. Now we have this opportunity, right? So now we couldn't get in on Microsoft. We couldn't get on Apple. We possibly couldn't get on Facebook. We didn't know how to get in on these other things. Even Amazon, right? Who would have loved to get in on Amazon? If you had invested $1,000 in Amazon, you would be a millionaire today. Just off Amazon, right? But we didn't know how to do it. There was no opportunities for us. If you have not subscribed to this channel by now, I want you to make sure that you hit the subscribe button. If you're not following me on Instagram, make sure that you're following me. If you have not pressed the like button, make sure you press the like as well. Okay. I appreciate y'all. So now we have this opportunity. Now we can go to Robinhood. We can go to Fidelity. We can go to our 401k through our employers. We have all these other ways that we can get in on the stock market, right? You can easily download an app on your phone, the Moomoo app or the Robinhood app. I prefer Robinhood. It's just easier. It's easy to me to navigate, but you can use Stash. You can use Cash App. You get in wherever, right? But keep in mind, wherever your money is, it kind of has to stay there. Because if you decide that you want to leave that brokerage and go to a different brokerage, now you have to turn that money from stock into cash, and then you have to go buy the stock at the new brokerage for whatever price it's currently trading at. So you probably want to try and stay with whomever you're with. Okay. So if you're with, like I have money in Robinhood, but I also have money in Fidelity, right? And I have money in Charles Schwab. right? But that's because I was like moving around, like trying to figure out which one I like. So I just keep it. I keep it at where whatever I'm currently invested in at that brokerage, I keep it there. But new stuff, I will invest in other places. Okay, and we'll talk about all that in just a second. All right. All right. So the bottom line is that we now have this opportunity, and for those of us who look like me, this is one of the ways that we work smarter, that we work less hard. Okay, that we actually have a sizable retirement for ourselves, that we have something to leave to our children and our grandchildren. Okay, this is one of the ways. But the problem is that this is not taught in schools. This is not really taught really anywhere. And it's confusing for most people, right? If you look at all these numbers and lines on a graph, they make it really confusing. And that's not by accident. That is by design, right? The 1% want to remain the 1%. And if the 1% can prevent the average person from understanding, oh, this really isn't that complicated, then guess what? They're going to do that. They don't want us. And I'm saying us as in anybody of any color, right? They don't want the non 1% to understand this is not that complicated. This is not that complicated at all. It's actually pretty simple. But because they got all the lines and all the numbers, and you got the people, the talking heads on TV, and they're, all this, it's too much. It's too much. And you just check out. You're like, you know what? I'm not even gonna play this game. I'm just gonna save money in my savings account that's not gonna get any, that's gonna get a 0.2% return and hope for the best. Right? No more. Yes, Violet. No more of that. Okay. So this Avgo stock split happens on July 12th. Each share will be worth 10 shares. So whatever the share price is when it closes on Friday, it's going to open. Closes on July 11th. It's going to open on July 12th at divided by 10. Okay. So let's check the date. July 11th is what day is July 11th? I can't even see. July 11th is a Thursday. Okay. So the stock market is open from 9:30 a.m. Write this down. Open from 9:30 a.m. Okay. To 4 p.m. Eastern time. So depending on where you live, you need to adjust for the time zone. Okay. So it's open 9:30 a.m. Eastern time until 4 p.m. Eastern time, Monday through Friday, excluding holidays. So, for example, the stock market is not open today because it's Juneteenth, and Juneteenth is now a national holiday. So there's no trading happening on Wall Street today. But tomorrow, it will open. It will be no trading happening on Saturday or Sunday either. Okay? Danny says she has stash thinking about reopening her Acorn. Yes, please do. Does it take a lot to invest? No, it does not. It does not take a lot to invest. Danny responded and said, nope, you can invest with as little as $1. She's 100% correct. Thank you for that, Danny. Nefertiti says, thank you, Gwen, for doing this. I told my husband at the beginning of the year that I wanted to learn how to invest in stocks. So this is perfect timing. Yay! Here we are. And Tanya says, I agree, Adina. A lot of our people do not like to share or teach this. They do not. Adina says, I appreciate you sharing your knowledge in a way that I can understand. I love it. I'm so grateful. Y'all who have been around me or seen me or been part of my community for a while, like I love to teach, and it like energizes me to see those like proverbial light bulbs go off where y'all like, oh, I get it. I understand, because most people make shit way too complicated. They really do. Like things are not as complicated as the world tries to make it seem. And investing is the same thing, even money. And I hope that you are in my group on Facebook, which is the Get Money Crew on Facebook. If you are not a member of the Get Money Crew, you're going to want to, because I'm going to do a Fix My Finances challenge. Fix My Finances 5-day challenge is going to be coming up next month. So if you're not a member of that group, you're going to want to make sure that you go find Get Money Crew on Facebook and join it. Okay. Because we're going to be doing a 5-day Fix My Finances challenge, and it's going to make all your finances so simple, and you're going to be like, wow, I cannot believe that I didn't understand any of this. But now I completely get it. Okay. All right. So there's two plays here with this Avgo stock. Okay. If Avgo Sharon says if Avgo splits and sells for $180, that buys one share. No. Well, yes, Sharon. Yes, it does. Yes. If Avgo, when Avgo splits for whatever the price is, if it's $180, that will buy one share. Yes. On July 12th. But if you buy it today, you're going to pay $1,800. Let's look and see what it's trading for right now. Avgo. And you can simply, by the way, you can search any stock. What's up, Ed, over on Instagram? Good afternoon. You can search any stock on Google by just typing in the stock ticker and then stock. Okay, so in this case, I'm typing in Avgo stock, and it brings it right up. It says Broadcom trading currently at $1,802, $1,800, $1,802.52. Keep in mind, again, today is Juneteenth. The stock market is closed, so it's not going to move up or down today. Okay, all right. So it's 1802 today. Of course, stocks go up and stocks go down. So it might be trading at less by July 11th, by July 12th, or it might be trading at more. With that said, there are two plays here. But before I tell you what the two plays are that you can do, you have two options here, right? To get in where you fit in. I'm going to tell you because y'all been asking, how do you invest in the first place? Okay. All right. First things first, you need to have a brokerage account. So your brokerage account can be something like Robinhood. Most of us have heard of Robinhood. Robinhood kind of got into some hot water around the pandemic time when GameStop was trading at a really high price because they had stopped trading. So some people don't like to fool with Robinhood, but I believe that the SEC has kind of like eliminated that from happening. What's up, Connie? Welcome, welcome, welcome. Beverly, I'm so glad that you tuned in also. Tawana says, hey, Gwen, thank you so much for this. It's hard to trust people about money and advice. Grateful that you are taking the time to educate. You are welcome. You are welcome. 7L Bliss Massage says, I want to connect with you, Gwen. You can email me at hello@gwenjameer.com. Hello@gwenjameer.com if you would like to connect with me. I'll put that in the chat here. Okay. Jameer.com. Okay. You can email me there. Also, if you are not a part of the Get Money crew yet on Facebook, I'm going to drop the link in there for y'all to click that and join the Get Money crew on Facebook. Okay. Join the Get Money crew because, again, we're doing the 5-day Fix My Finances challenge in July, and it's going to make things so much simpler and easier for you. Okay. Now, Robinhood is one brokerage that you can use. You're welcome. You're welcome over on Instagram. Robinhood is one brokerage. I use Robinhood. I like it. Okay. It's simple to use. It's not confusing. It's great for the average retail investor, such as myself and you. Okay. There's also Moomoo. Moomoo is another one. Listen, all these, they all do the same thing. Okay. So it's really just potato here. Moomoo is another one. You can download all of these and you can kind of see what the interface looks like. And you can decide, well, this one actually resonates with me more. I like how this one looks. It seems easier to navigate. And all these stocks are available on all of these platforms. Okay. So you don't have to be like, well, is this available over here? They're available on all of them. Okay. There's also Acorns. So if you have Acorn, a lot of us have an Acorn account, you can use Acorn. If you have Stash is another one. I'm trying to think. Gosh, so many. Cash App even. I actually don't like the Cash App trading thing. I don't know. It just feels unofficial to me. But if you have it, you can use it. Okay. Let's see what else. Those are just some of the Webull is another one. Webull. So Sharon, who asked this earlier, I hope that you're still on. Sharon Jenkins, if you're still on, let me know. So Webull is another one because you're the one who asked this question, and Tawana as well. Webull, Stash, Robinhood, Moomoo. Okay, Moomoo is Moomoo, like a cow. Okay. Okay, great, Sharon, you're still here. Okay, so those are all. Yes, Fidelity is also a brokerage account. I'm gonna talk about why I separated that in just a second. So all of those that I just mentioned are like retail investor brokerage accounts that you can download the app and you can use it on your phone. Sharon, if you have Webull, that's perfect. Okay. Hello, Instagram. If you see my eyes moving back and forth, for those of you who are Instagram or on YouTube, I'm talking on both devices. So I got one device over here for Instagram. I got one device over here for YouTube. So my eyes are moving back and forth. So I'm trying to make sure I address everybody. Okay. If you got questions over on Instagram, make sure you ask them. I'm going to address them as well. Over here on YouTube, it's popping. Okay. So they got all the questions and all the comments. So if you got questions and comments, make sure that you ask them or state them as well. Okay. I will address you too. All right. So, those are, again, what I would consider to be like retail brokerage accounts. You download the apps. Now, there's other ones like Fidelity, Charles Schwab, Those are two very well known and very well respected brokerage accounts as well. The reason that I've kind of separated them from the other ones is that, and I have Fidelity, by the way. Oh yeah, Stockpile is another one, Lisa. Thank you. The reason I separated Fidelity and Charles Schwab is so hard for me to say. Charles Schwab and Fidelity from the other ones is because those also house things like 401ks, Roth IRAs, things like that. You can't really do those over on the ones I mentioned, like Robinhood and Cash App. You can't open a Roth IRA with Cash App or, any of these other places. So these are retirement accounts that are available through Fidelity and through Charles Schwab, but you can also just trade regularly on those as well. So if you already have a Fidelity account, I think I saw someone say they have a Fidelity account, right? Then you can just use that for everything, okay? And all these websites and all these brokerages have apps. Like I said, I have Charles Schwab because my HSA, which is my health savings account, that is connected. They use Charles Schwab. So I didn't have a choice, okay? So I had to use Charles Schwab for them. And I like Charles Schwab, but the only thing I have in there is the money from my HSA, okay? Fidelity is my go-to for Roth IRA, SEP IRA, traditional IRA. We could talk about all of that, all those different types of retirement accounts, which we will in the Fix My Finances Challenge, which is happening in my group, the Get Money Crew, on Facebook in July. But you got to be a member of that in order for us to talk about that, right? Charles Schwab is a brokerage account, Gabrielle. Yes, it is. Okay. Now, again, I have Fidelity. I have a SEP IRA. I have a Roth IRA. And I have a traditional IRA. And my son has a Roth IRA as well. So we have a custodial Roth IRA for him. Okay. All that takes place on Fidelity for me. And then I also have Robinhood, which is what I use for my like everyday kind of trading, like my retail stuff that's not attached to retirement money. So for me, I like to keep it separated. That's just how I do it. You don't have to do it like that. Again, it doesn't matter where you trade as long as you trade, right? Doesn't matter. Doesn't matter where it's happening as long as it's happening. But yes, Edward Jones is another one, Beverly. Adina says she has her 401k is called TSP because she works for the federal government. Yeah. So she could use that for her 401k. Now, wherever your 401k is, your company will determine your company that you work at will determine the brokerage that they use. You don't get to choose that. Okay. So for us at Naturalicious, those of you who know my company, Naturalicious, we use a company called Guideline for our 401k. Guideline is our 401k. Okay. But any brokerage is good. So Sharon and Tawana, you were asking, how do you trade? The first thing to do is open a brokerage account. Sharon, you said you already have Webull. You already have Webull, which is fantastic. So you can just use Webull, but you can't use Webull for, retirement. You can only use it for like regular trading, like retail trading is what I will call it. Gabrielle says, how do we follow you on Instagram? You can follow me on Instagram at The Gwen Show. So I'll drop the link in here for that in case anyone wants to follow me on Instagram. Instagram.com/The Gwen Show. Okay. That's me on Instagram. Hopefully that link works. Let me see. I feel like I typed it wrong. Oh no, I did. Okay. So that's me. That's me on Instagram. Hold on a second. Your IRA is with TIAA. Okay, great. Great, Sharon. That's perfect then. TIAA, that's ideal. Okay. So again, you can keep them separate like I do, or you can just go to one. If you're going to go to one to have everything, my suggestion is either Charles Schwab or TIAA or one of the brokerages that include the retirement accounts, like the Roth IRA, like the 401k, all that sort of stuff. Okay. If you just want to have one place to go, I don't mind having multiple. It helps me separate things. This is how my brain works. Okay. There's no right or wrong way, as long as you open one. So that's the first thing you got to do is open a brokerage account. Give me a second. This fan is doing something funky. Hold on. Okay. Y'all like my dress? I just love this little dress. I just love it. It's so good. It's good for like an art museum. It's good for date night. It's good for casual. It's good for dressing up. You can put some heels. I just love it. And it's yellow. It's like one of my favorite colors. I just love it. It's a Shein find, y'all. Like, don't sleep on Shein. Shein, people talk trash about Shein. Y'all, this dress was like $14. And I love it. So, and me spending $14 on this dress gave me more money to invest in the stock market. So I adore it. Thank you. I appreciate you. Thanks, y'all. Y'all so affirmative. I just love it. Thank you. And you know what? Sidebar. Your girl done lost a couple inches in the waist and the hips. So like I'm out here, right? I'm out here with like, you know, like no Spanx, just out here. I'm like, okay, let me get back to the point of the video. All right. All right. All right. Thank you guys. I love y'all. Y'all so sweet. All right. So you have to open up a brokerage account first. Okay. So open up your brokerage account if you don't already have one. Jesus, this fan is like tripping. It's hot as the Dickens, as my grandmother would say, out here in Michigan. All right. So open up your brokerage account. That's the first thing. Okay. First things first, open up brokerage. Yes. Nefertiti says, too cute, Gwen. I love it too. Yes, I love a great bargain. Yes, honey. I'm here for a good bargain. I don't spend a lot of money on clothes because, you know, I don't think you need to. But anyway, thank you for that. I love y'all. Open up a brokerage account first. Okay, so get that done. Also, subscribe to this channel if you haven't done so. Click the subscribe button and hit the bell for notifications so that you know every time I'm going live. Okay, because we're going to be doing this every Wednesday. And every Monday, I drop a pre-recorded video. Every Wednesday, I drop, I'm going live for Run It Up Wednesdays. Okay. All right. Get your brokerage account together. After you do that, you need to fund it. Okay. So here's where a lot of people go wrong with like 401ks and IRAs and things like that. Now, again, we're going to be talking about this way more in depth over in the Facebook group, which is the Get Money Crew, which I've pinned the link to it here in the chat. Okay. I've pinned that link here. So you can go to there and join the group. We're going to be talking about this much more in depth over there during the 5-day Fix My Finances Challenge. Okay. But a lot of people go wrong with IRAs and retirement accounts of 401ks and even like student, what's it called? College savings funds and all that sort of stuff, because they put the money in there, but they don't ever invest it. And so they're basically using it as a savings account. In order for the money to grow, you've got to invest it in stocks, ETFs, all that sort of stuff. We're not talking about ETFs today. We're just talking about stocks. Don't worry about ETFs. I don't want to confuse y'all. We'll talk about ETFs another day. Okay. So you want to make sure that you are putting your money into stocks that is in there. Don't use it as a savings account. What's the point? You're not making no money off of that. If it's just sitting there, you have to invest it. So for those of you who already have a 401k or a Roth IRA or a SEP IRA or traditional IRA or any sort of retirement account, even an HSA or a college savings fund for your child or grandchild, do me a favor and give me a 3. Actually, give me a 3 in the comments. A 3 if you have any sort of like account that you're saving money in for retirement, for your kids, grandkids, or even for your health savings. Okay. I see 3s. What's up, Letitia? Hey girl. We over here on everybody else over here on they over here on YouTube. You on Instagram. It's so good to see you. Okay. Malachi says that he has one of those accounts. Letitia has those accounts. Letitia, you're a teacher, right? So you might have don't teachers have like some sort of special like retirement account? I think Rhonda says 3. Lots of 3s over here on YouTube. So Adina, Elise, Sharon, Agina, Erlene, Michelle, Christy, Lisa, Danny, Elena, Beverly, Lynette, all y'all got some type of account like this. Ed over here on Instagram has retirement accounts. Okay. So how many of you all have actually invested your money? If you have not invested your money in those accounts, give me a 4. Give me a 4 because we're going to fix that today. If you have not invested your money in those accounts, give me a 4. Okay. Yes, YouTube is on fire, Gina. We're popping over here, honey. It's popping. This is the place to be. As my friend when I was in college would say, it's shaking over here on YouTube. Okay, Letitia says that yes, teachers have a special 401k. Okay, I thought so. Just like I know, like government workers has a special situation too. Okay, so Agina, Edith, Tanisha, Sharon, Michelle, you guys, and by the way, y'all know me. This is a safe space. Okay, this is not a space where it's a no judgment zone. Okay, if you have not done this, feel free to be vocal. Okay, feel free to be vocal. There's no shame in it because again, like I told y'all earlier, if you were on earlier, most of us don't know because this is not taught in schools. It boggles my mind how in the schools, like my son comes home, he's 13, he comes home, math homework for doing parallelograms and BS like that, but they don't teach them about money. They don't teach them about money at all. You know, like basic money. Like they may teach them how to like write a check, but who writes checks anymore? Like he's still a piece of paper writing a check. Nobody writes checks. Come on. What are we doing? Why don't people know about this? Because we haven't taught it in schools? Crazy. Absolutely crazy. Okay. So if you don't know it, he don't know. Well, he knows it because I teach it to him, but he didn't know it either. I didn't know it. Right? I had to learn all of this. And luckily, I've learned it and I can teach my child, and y'all gonna learn so you can teach your kids and your grandkids, and you're gonna do better for yourself, right? All right. You are so welcome. He says, we love you. Thank you for sharing what you know with us. You are so welcome, my dear. You're so welcome. Okay, so I see a number of 4s over here on YouTube. Okay. And again, thank you all for being transparent. Again, there's no shame here. Okay, we're gonna get this together. We're gonna get this together today. Okay. Tanisha, Sharon, Agina, Michelle, Beverly, Danny, Tawana, Nefertiti. Oh, y'all have 4s, okay? And I know there's some other 4s on here that didn't comment, and that's okay. Okay, it's okay. It's okay. Chrissy says, I'm a little confused. Did you include 401k savings account? If so, are you asking if we invested that money? Yes, because your 401k is actually, it's not just a savings account. Well, it is a savings account, but it should not be just a savings account. Yes. And 403B for teachers. Yes, Gabrielle. Okay. You all should be investing that money, right? The point is for it to grow for you, right? Here's what I want you all to remember. Okay. And I'm kind of going off a little bit from the Avgo stock stuff. Okay. I want y'all to remember this. I'm glad to hear, Letitia, that you've invested your money. Every dollar that you have should be an employee. It should act as an employee. You are the boss. You the boss chick. Okay. You the boss dude. You the boss man, boss woman. Okay. Every dollar that you have should serve a purpose, and it should be working for you. You should send your money out into the world, and it should make babies, right? It should come back with offspring, right? It should come back with more for you that you didn't work for. Okay. So if you have your money in a 401k, for example, and you haven't invested it into anything, it's just sitting there. Your money's not working for you. You're working for it, right? You're working to make that money, to earn that money, to put into the 401k. But if you don't invest it, right, because your money has the opportunity to be invested, right, then it's just sitting there, and it's literally just a savings account. And it's not really even getting that much interest. You would get more interest if you put that money into a high yield savings account, which we'll talk about in the Fix My Finances challenge. Don't worry about that right now. Okay. If it's going to be in a 401k, if it's going to be in a college savings account, if it's going to be in an HSA, if it's going to be in a 403B, right? Any of these sorts of retirement accounts, you need to have it invested. It gets invested, Erlene, if you tell it to get invested. If you tell it to. It doesn't get invested automatically. If your company invests it for you, you still need to know what it's invested in. Because again, no one's going to care about your money nearly as much as you care about your money. Okay. And a lot of times when companies invest for their employees, they have like a blanket kind of slate of stocks that they invest in. They're not necessarily investing in the best stocks. They're just investing in whatever it is based upon, let's say, when you're going to retire. So they may say it's going to, if you want to be aggressive or if you want to be conservative or what have you, and they'll just throw their money in there. But they're not cognizant. They're not looking individually at Erlene Murray stocks. They're not looking individually at Beverly Reed stocks or Dina Porter stocks or Gabrielle Romeo stocks, right? They're not, or Cousin Ed stocks. They're not looking at that. So you need to be aware of what is being invested in so that you can make better decisions, because nobody gives a rat's behind about your money as much as you do, right? Yes, Nefertiti, I want my money to make babies. Yes, go out, be fruitful and multiply, please, please, right? Do me that favor, okay? So we're gonna stop just putting our money into the 401ks and all that sort of stuff. Like, that's great. Don't stop doing that. Keep doing that, especially if you have a company match, right? Because that's free money. Like, why not, right? But we also want to make sure we're investing that money. Yes, Michelle, the company portfolio will show the investments. You have to look at it though. How many of us are looking at it? Most of us don't. We're just like, oh, my company got it. They investing for me. Cool. Right. And we're just kind of hoping that our money will eventually grow, right, until we retire. But if it's not invested, it's not gonna be millions of dollars. We need it to make babies. We need to make a lot of babies. We needed to make like them 1800s babies where people was having like 15 kids. Like, everybody had 15 kids. We want that, right? We want every dollar to be making a bunch of money for us. Okay. All right. What's up, Brandy? Thank you for joining. All right. So again, if you click on the link that I have here, your company does not match, Michelle. Interesting. Edina said her company matches up to 5%. That's actually really good. I think they usually max out at 5 or 6%. Usually. I mean, some do more, of course, but the average is about, 3 to 5%. 5's on the higher end. Go to the link that's saved here on YouTube. Click the link, go to the Facebook group, join that group. Okay, we're going to be talking more deeply about this during the Fix My Finances Challenge in July. Lynette says, I invested my own money by researching what my company offered. Great. Nefertiti says, yes, so correct. My response, mine is invested, but I had very little to no knowledge when I chose the investments. Amazing. First of all, Nefertiti, we're going to give you a hand clap because you had the foresight enough to say, okay, I know I need to be invested in something. I don't really know what, so I'm just kind of shooting in the dark, but I'm going to invest. So good for you for even attempting, because some people get scared and they don't do anything. Okay. Michelle says she works in law enforcement. Awesome. Ed over here on Instagram says you should do monthly or quarterly reviews. You absolutely should. He's absolutely 100% correct. Okay. So you're going to be investing your money into stocks. You can also use bonds. We could do ETFs. Again, we're not going to go deep into that today because we're really supposed to be talking about Avgo stock. That's really what we're here for today. And I don't want to confuse y'all. But right now we're talking about I'm planting the seed in your mind that you need to be investing your retirement money as well. Okay. If you want to retire a millionaire, if you want to retire, with multiple high-end six figures or millions, you've got to invest it. Here's the thing. You can never save your way to wealth. You can't. That's not how it works. You cannot save your way to wealth. You may be able to save your way to get rich, but being wealthy, like independently wealthy, meaning like you have what we call FU money, right? This job pisses you off enough and you just like, you know what? I don't need this. I got enough money in my bank account, my retirement fund, where I don't got to take your mess. Goodbye. Right? We want that kind of money. Not saying we're going to leave a job because maybe we love our jobs, but it would be nice to be able to have that option, right? Well, I would call FU money. Okay. We want our retirement accounts and our bank accounts and all that sort of stuff to have that level of finances. And that's going to be different for each person, because what you may need to be independently wealthy is totally different than what I may feel like I need, or what someone over here on Instagram may feel like they need, right? It's going to be different for every person. We'll talk about that again, the Fix My Finances Challenge over on Facebook in July. Okay. So make sure you click the link and join the group. All right. So I'm planting the seed right now. So all my fours, don't feel shamed. Don't feel shamed, because when we know better, we do better. Right? But if we don't know better, we can't do better. We just can't. Like, nobody teaches us. And a lot of times we don't know where to go to find this information, right? And when people talk about it, one, very rarely do they look like us, right? And so there's always that just natural barrier, because it's like, well, I don't even get what they're talking about in the first place. Secondly, when they talk about it, they make it confusing. and hard to understand. It's just too much, right? Yes, the goal is FU money. Elena, I should get it down on a t-shirt. I should make that t-shirt for y'all. I say FU money goals, right? That's what we may have to do that. Yeah, Shell from cohort 2. That's my girl over on the West Coast, right? All right, so let's get back to the plays, okay? So in terms of funding your brokerage account, okay, whatever brokerage account or brokerage accounts that you choose, right? You have to fund it. So if you already have a 401k, if you already have a HSA, okay, some of us have HSAs also. If you already have a 403b, if you already have a Roth IRA, which everyone should have a Roth IRA, even if you already have a 401k. Even if you're a 401k, you should still have a Roth IRA. If you haven't hit the subscribe button, click subscribe for me here on YouTube, okay? You should have a Roth IRA. Why do you want to have a Roth IRA? This ain't even what we're supposed to be talking about right now, but I'm going to tell you anyway. You should have yourself a Roth IRA because Roth IRAs you can take the money out tax-free. You take the money out tax-free, okay? This is great. We don't like paying taxes, okay? You've already paid the money. You've already paid the taxes when you got paid, okay? So when you got paid from your employer, you pay taxes on that. You then put that money into the Roth IRA and you can take it out anytime tax-free, okay? This is why Roth IRAs are amazing, okay? You do not have that same option with the 401k. You do not have that same option with the traditional IRA or even the SEP IRA, okay? But you do have it with the Roth, okay? Danny says, I did start a Roth with my company's 401k. Now I got to look into the investments. Yes. So one thing I want you to do when we leave here, I want you to go to all of your retirement accounts or your investment accounts that you already have. And I want you to pull statements for them. And I want you to review them. I just want you to look over them. Don't worry about understanding them or even like breaking it down or whatever. Don't worry about that yet. We'll go through all of that in the Fix My Finances Challenge, okay? But just pull them. Just get familiar with how they look, okay? You should be doing this quarterly. If you're doing really, really good, you should do it monthly. Okay. At minimum, you should be doing this twice a year. Okay. You got to know what your money is doing. You got to make sure they're making babies. If they ain't making babies, something wrong. We need all the babies to be made. Okay. All right. So if you already have money in any of these accounts that we've been talking about, right? So this is not new money that you're putting in. This is money that you already have. You can invest in Avgo stock with that money. Okay. So again, if you do not have $180 or multiple, let's say $1,000, $2,000, $3,000, or whatever it is in cash that you want to put into a brokerage for Avgo stock, you can use the money you already have in your current brokerage accounts. So Sharon, you said you have a retirement account, but it's not invested. Cool. You can use money from there. I don't know how much you have in there, but however much you have, you can take a portion of that. Never take all of it. Okay. We want to diversify our money. We don't want to have all of our eggs in one basket because if that one basket tanks, we don't want our money to be gone. Right. So you're going to put some of your money into Avgo stock in this case. Where do we go to learn this information as plain as you're explaining it to us? I don't know, Gabrielle, because it ain't never been explained to me this simply. I would just say join my group because I'm going to be talking about it in this plain language. So there are 3 books that I think are really good. And I'm actually going to make a video about that today or tomorrow. It'll be on one of my Monday videos that I drop. But one of them that is really, really great is Fearless Finances. Fearless Finances by Cassandra Cummings. Fearless Finances by Cassandra Cummings. She's a sister. She was a financial advisor at one point. She talks a lot about stock investing. Okay. Hey, Tachina. Hello. So that's a really good book. Another one is Get Good with Money by Tiffany Aliche, also known as the Budgetnista. She doesn't talk about stocks as much. She talks more about like getting out of debt and understanding how credit works and that sort of thing. But those 2 books are really great. Another really good book that has nothing to do with stocks really is Total Money Makeover by Dave Ramsey. Those are the 3 books I recommend that will I literally read over 200 books on money, and those are the 3 that will make you rich. Those are the 3. Okay, those 3 books. Hey, Danita, what's up, girl? All right. Those 3 books. So again, I'll run it back for you because Gabrielle asked, where do we go to learn this information as plain as you are explaining it to us? Okay. The first one, I'm gonna put it in the chat over here on YouTube. The first one is what's it? Total Money Makeover by Dave Ramsey. Okay. The next is, oh geez. Y'all making me think on the spot. Get Good with Money by Tiffany Aliche. And the last one is Fearless Finances by Cassandra Cummings. Okay. So I'll put those 3 in the chat over on YouTube. Okay. I appreciate all y'all for being here, by the way. Like, I know it's like 1:00 Eastern time. We started at 12. And like a lot of y'all probably at work. A lot of y'all might be doing something else. You could have been doing anything else. I really appreciate you being here. I really, really do. So thank you for being here. Give yourself some love for watching to learn about something that's going to actually change your life, right? Because how much stuff is on social media that's just foolishness, right? Just foolishness and nonsense. People dancing, which is cool. I like to dance, but people dancing and folks arguing and people fighting and all that sort of stuff. Like, you could be watching any of that stuff because that stuff is entertaining. But you're here. You're here to learn about your money, which I'm so proud of you, and you should be proud of yourself. Okay. All right. So those are 3 books that I recommend. Thank you for asking that question, Gabrielle. All right. So yes, thank you to Tina for dropping those names of those books, and Danita as well. I appreciate y'all. What's up, Antoine? Thanks for joining. Danita says, oh yeah, you got to go back and look at your investments. Yes. Okay. By the way, again, if you want to learn more about this sort of stuff on a regular basis, join my group on Facebook. It's called The Get Money Show. If you're on YouTube, the link is in the chat. If you are on Instagram, you can go to Facebook and just search for Get Money Crew. Get Money Crew on Facebook. Okay, that is my private group. We're talking about money in there. We're going to do a 5-day free 5-day Fix My Finances challenge, and we'll dive really deep into many of these topics I'm talking about today. But today I'm supposed to be talking about Avgo stock. I keep getting off topic, so I want to make sure I stay on top. All right, sounds good, Sharon. Have a good day. All right, so you can invest your 401k, all the whatever your retirement accounts are right now. Okay, you can invest that into your you can invest in Avgo stock. You can invest in Nvidia. You can invest in Microsoft. You can invest in Tesla. You can invest in any of these companies through your accounts that you already have. So the great news, people, if this part is exciting for you, give me a 5 in the comments. Okay. The good news is that you don't have to come up with brand new money to invest. You can use money you already have in your accounts for this to grow, to go make the babies we talking about. Okay. You don't have to use brand new money. Yes. I see 5s over on Instagram. I see 5s over on YouTube. Yes. That is exciting. Because it's like, damn. I mean, $180 a share is a lot cheaper than $1,800, but sheesh, I still got to come up with, like, if I want to get 10 stocks, I still got to invest $1,800, right? Like, that's still quite a bit of money. But you don't have to. You can use the money you already have. Yes, I love it. Yes, Cousin Ed. Yes, Malachi. Yes, Letitia. Yes, Jennifer, Christy, Danny, Shell, Violet, Bridget, Elena, Rhonda. I love it, right? So this is exciting because it's like you are less far behind than you think you are. That is exciting, right? A lot of us probably feel like, dang, I didn't even know this. I might be in my 40s. I might be in my 50s. I may be about to retire. I already am retired. I might be 35, whatever. And I haven't done any of this. I'm so far behind, but you're actually not. So give yourself some grace because you're not nearly as far behind as you think you are. Okay. So pat yourself on the back for me real quick that you already have some money invested. Yes, Maria, Beverly, Tawana, Elise, Rhonda, Michelle. Everybody's excited. Everybody's got to give me a 5, okay? Yes, Danita. Danita said you are less far behind than you think you are. Absolutely, okay? So here are the 2 plays that you can do. Now, of course, you can put brand new money into the stock. The stock is called Broadcom. 7L Bliss Massage. It's called Broadcom, but the stock ticker is AVGO. Okay, I just put it in the chat. AV like Victor, A like Apple, V like Victor, G like girl, O like octopus. Avgo. Okay. All right. So you can put that. You can invest in that with money you already have. Okay. You can also take brand new money if you have it available. If you have some disposable income, let's say your debt is paid down, and you're like, okay, I'm going to invest this money into cash. Okay. Put this cash into the stock. That's another option. Okay. But if you already have money in there, you can use that. You got two plays here. Okay. And I gotta wrap this up pretty soon because I got an appointment at 1:45 and I gotta drive over there. Okay. But I want to make sure y'all get this. So write this down. Two plays. And you have time to think about this because the stock doesn't split until July 12th. July 12th. Okay. Two plays. The first play, got my notes here, so I don't want to make sure I forget anything. The first play is to wait until July 12th to buy the stock, right? It's going to split at whatever the cost is on July 11th. The next day on July 12th, it's going to be, you're going to divide that price by 10. So it's going to be 10% of whatever the price was the day before. This is what most people are going to do. Okay. So if the stock is $1,700 on the 11th, it's going to be $170 on the 12th. If the stock is $2,000 on the 11th, it's going to be $200 on the 12th. Okay. Follow me? That's what you can do. And then you can decide how much money you want to spend. Now, if this is the first play that you're going to do, then you may want to decide now how much you want to invest. So let's say you're like, okay, I got $3,000 to spend. So whatever it is at $3,000, that's what we're gonna do. Okay. What's up, Ebony? It's my girl. What's going on? Thank you for joining. I got excited. I saw my friend. Whatever the amount is, right? It's going to be 10% less than that, or 10% of that. And you're going to decide now, or between now and July 12th, how much money you have if you're putting in cash to spend. Even if you're using your retirement account, you should be able to go to your retirement account, which you are going to do, which I told y'all to do today. Okay. Go to your retirement account, look and see how much you have in there. Your retirement account, if your kids have a college savings account, your Roth IRA, any of those sorts of accounts, you're going to go and you're going to see how much money you have. And you're going to determine how much you're going to use of that to buy this stock. Okay. So maybe it's $3,000. Maybe it's $10,000. Maybe it's $2,000. Maybe it's $500. Whatever it is, it's going to be different for every person. And there's no wrong answer. Obviously, the more you spend, the more shares you will have. Okay. But of course, we are never going to put all of our money into one stock because the stock market is volatile. It goes up and it goes down. And we don't want for all of our money to crash. Okay, so we're going to put a portion of our money into the stock. So if you know what that number is now, great. If you don't know what it is, that's cool too. Okay, are y'all still with me here on YouTube? Y'all still with me here on Instagram? Let me know in the comments. Give me an emoji, any emoji if you're choosing, if you're still with me. Okay. And again, if you're on YouTube and you haven't hit the like button or hit the subscribe button, hit that subscribe button. Okay. All right. So that's the first play. All right. First play is to wait until July 12th and buy the stock at whatever the price is. You're going to do what's called a market order. Okay. So whatever the price is the price that you're going to buy it at. All right. Thank you over here with the emojis. I love it. I love it. What is this one? This little, is it an owl? Like a colorful owl? I've never seen that one before. That's cute. Or those two birds. I can't tell. Anyway, I like it either way. Thank you, Danita, for over here on Instagram for letting me know you guys are still with me. Okay. The second play. Now this is a little bit more advanced. Okay. So I want y'all to make sure y'all stay with me. Okay. The second play is to buy the stock now at the higher price. Why would you do this? I'll explain in a second. You could buy the stock now. Currently, it's at $1,802. So $1,800 is what the stock is today. Okay. You could let it split because remember, if you buy it today, if you buy one share today at $1,800, you're going to own one share. Okay. You're going to own one share. If you buy two shares, you're going to spend $3,600. So $1,800 times 2, right? So say you bought one share at $1,800. If you did that now and you let it split in July, because we know for sure it's splitting. Like, this is not an off chance it may split. It's going to split, right? We know it's going to split. So it's going to split 10 to 1. So if you spend $1,800 today and it splits to 180 and you just buy one share, when it splits on July 12th, you will now own 10 shares at 180 a piece. Okay. It's still going to be $1,800 either way. Okay. You may say, well, then why would I do that? Well, here's why you might want to do that if you can afford it. Okay. If you do that, either way, you're going to spend the same amount of money. So don't worry about spending more money at one time versus not or whatever, right? You're going to spend the same amount of money. When that stock goes back up, because it will go back up. Oh, it's going to go back up, right? You will own, let's say it goes from, I got my pen and paper here. So it's $180 at 10 shares. That's $1,800, right? Let's say it goes back up to $1,000. So then you're going to own 10. Then you're going to own now 10 shares without you putting any more money in. You're going to own 10 shares at $1,000, right? 1, 2, 3, 4. 1, 2, 3, 4. Yeah, right. So when it goes back up to $1,000, you will own 10 shares at $1,000. And then you will have made $10,000, but you didn't put any more money in. Now that might be a play you want to do. Okay. Again, let me run it back. You got two options. Most people are going to do option number 1, and neither option is wrong. It just depends on your comfort level. Okay. Option number 1 is to buy it when it splits. This is the best option, especially if you're going to spend less than $1,800 or whatever because again, we don't know what the stock is going to be on July 12th or July 11th. We don't know yet. All I know is that 2 days ago it was $1,735. So within 2 days, it's gone up a little less than $100 within 2 days. Okay. So whatever the price is on July 11th, if you buy it when it splits on July 12th, you will pay 1/10 of that price. So again, if it's $1,800, it'll cost $180. A month is a long time from now in the stock world. So it could be a lot higher. It could be a lot lower. We don't know. Okay. This is, again, what most people are going to do. If you're going to spend less than $1,800 or so, this is the play for you. This is what you want to do for sure. Okay. If you plan to spend $100, you plan to spend $300, $500, $700, whatever, that's the one you want to do. Okay. But if you're going to spend more than $1,800 or more anyway, you may want to consider play number 2 because you will benefit from the stock split and the when the price goes back up. Okay. Again, play number 2, and I understand it's a little bit more advanced, so I want to make sure I run this slow. Okay. Play number 2 is to buy the stock now at the current price, which as of today is $1,800. Buy it before it splits. Once it splits, you will have 10 shares. You can buy one share, hypothetically, right? If you buy one share, you will have 10 shares. Because remember, when a stock splits, the price is 10% less, or it's 10% of the main price, but you multiply it by the amount that is split. So you multiply by 10. So if you have one share, you will now have 10 shares. Okay. But you will not have spent any more money. You will not have earned any more money. It will be the same amount. It will still be $1,800 if the price is the same as it is today. Right? Now, if the stock runs back up, which if we look at the history of this particular stock, just 15 years ago when it started, when it went public, it was $16. And now that stock is $1,800. You would have made $200,000 had you invested just $1,000 back in 2009 when it first went public, right? This is in my opinion, this is a buy and hold. Okay. When the stock splits and you don't put any more money into it, if it goes up to $1,000 again, you will have $10,000, but you only invested $1,800. But you didn't put any more money in. So you're going to need to think about this. Decide what you want to do. If you already have a 401k or 403b or, a Roth or traditional IRA or whatever, you may want to consider number 2. But if you're not comfortable with that, you're like, I'm real conservative. I don't know what's going to happen with that stock. It could go down. Okay, then do play number one. Play number one is really for the conservative person who's like, I want to get in, but I don't want to take a lot of risk, right? That's really for number one. Number two is like, you know what? I'm going to bet on this. I'm looking at the history of it. I can see it's always gone up. It's never really had any downs in 15 years. I'm thinking it's going to do something great. I'm going to go ahead and buy it now. Okay, so these are the two things that you can think about. You don't have to make a decision today. The stock doesn't split until July 12th. So you got some time. Okay, now, real quick before I go, if that makes sense to you all, please let me know in the comments. Just say makes sense. If it doesn't make sense, please let me know, because I don't like for nobody to leave confused. I need everybody to be clear on what's happening, because I wanted to make sure y'all are good. Yes, Erling, you always buy when the stock. Yes, ideally you want to buy when the stock is low. That is what we are taught, to buy when the stock is low. But that's also because most people don't know about how stock splits can make you a lot of money too, right? Because you may want to buy when it's high. It just depends. Because if you know the stock is splitting, now if the stock ain't splitting, you don't want to buy high, right? Like, no. Like if the stock is $5,000, like we're not buying that. But if it's gonna split like 50 to 1, maybe we do buy it because we know it's gonna run back up. And remember, stocks only y'all on Instagram, y'all may have missed this part, but stocks tend to split when companies are doing well, usually, right? If the stock is high, that's when the stock will split. You're not gonna have a stock split at, when it's at, $10 a share. It's not gonna split when it's at $50 a share. It's not gonna do that. Okay. It doesn't make sense. But if the stock is really high, then it might split. With that said, I'm gonna give y'all a little bit more advanced stuff in a second. Danny says, makes sense. Never thought to use my 401k to invest. See, girl, they don't teach us this. They don't want us to win, honey. They don't want us to win. They just say, put your money in 401k. And you know why your company tells you to put the money in 401k? Because your company gets tax benefits for you putting your money in 401k. They also get tax benefits for them matching your 401k. Did you know that? They're not just matching because they have nothing better to do or because they have money to spend. They're matching because they get a tax benefit. They pay less taxes when you put your money in, and they pay less taxes when they match you, because that's an expense for them. But they don't never tell you to invest it, though, do they? Why don't they tell you to invest it? Because they know if your money runs up, now you got FU money. Now, if your money runs up and you are 12 years from retirement and they pull some old BS on you, guess what you're going to do? I got $2 million in the bank, honey. I don't need this. Goodbye. That's why they do it. That's why they don't tell you. They don't want you to know that you should be investing with your 401k. Right? Remember, nobody cares about your money more than you. They don't care. They may do a little bit of investing here and there for you, but it's not going to be the maximum that they could do. Absolutely not. That's up to you. And unless you go and you find this information somewhere, which how would you know where to go, right? They're not going to tell it to you. It's to their benefit to keep you as an employee as long as possible, right? But it's to our benefit to make sure that we are as financially independent as we can be, okay? So I'm glad that you're here, Rhonda. Or I'm sorry, Danny. I'm glad that and Rhonda, I'm glad you're here too. But Danny, I'm glad that you're here and you're getting this information. I came in late. How we know the stock is splitting on the 12th, Erlene? Because the company has announced it. The company's announced it. It's all over the news. You can Google it. You can Google Avgo stock split and you'll find it all over the news. That's how we know. Yeah, they've announced it. It's on their website. It's in their financial documents. It's everywhere. They're splitting. That's how we know. But good question. Okay. You're welcome, Lexi. Yes. AVGO, Letitia. Yes, you have it right. AVGO. Correct. All right. So one thing I want to tell y'all before I go is that there's another stock split coming up next week, and that's for Chipotle. Now, I haven't decided if I'm going to invest in Chipotle or not more. I have a little bit in there now. But Chipotle is currently, well, as of yesterday, it was trading at like $3,400 a share. Crazy. I'm like, who goes to Chipotle? I mean, people go to Chipotle all the time, but I prefer Qdoba. Personal preference. But Chipotle has been in the news lately. people upset because they feel like Chipotle is not giving them enough food and not giving them enough meat and all that sort of stuff. But Chipotle is trading at $3,400. So it don't really matter that the people don't be listening to people on social media, okay? It don't matter that the people on social media are upset with Chipotle because somebody buying them. A stock doesn't go up to $3,400 if people are not buying from it. It just doesn't, right? Yes, Ebony. What's up, girl? It is $3,400 as of yesterday. Let me see what it is today. Chipotle stock is splitting. And the thing is, it's splitting 50 to 1. 50 to 1. So now that we've learned what a stock split is, y'all tell me what that's going to be. Denise says those Qdoba chips are delicious. I know, right? I love some Qdoba. Let's see, Chipotle. The stock ticker for Chipotle is CME, by the way. Oh no, I'm sorry. No, it's not. That's something else. Chipotle stock 34.27 is what it was yesterday. It's CMG. I'm sorry, CMG. Chipotle Mexican Grill. CMG is Chipotle stock. $3,427.61. That's what it was trading at yesterday. Remember, the stock market is closed today, so it's not trading today. Okay. Yeah, they've been having a lot of issues, Erlene. But guess what? Somebody buying from them. Somebody buying from them. Their earnings report is not down. Their earnings report is way up, actually. So somebody is buying. And their stock is splitting on the 25th, 50 to 1. That means that, let me pull my calculator out because my math is pretty decent, but it ain't that doggone good for me to be trying to do that in my head. Okay, so calculator. Okay, so why did my calculator app not open up? Okay, so 34, what did I say? 34.27, right? Jesus, I got too many windows open, y'all. Too many windows open. Where'd my calculator go? Oh my gosh, the calculator went away. Thank you, Lynette. Thank you. Because the computer was not doing what I needed to do. And my son took his phone that I had right here to use as a calculator. He's like, I need my phone, Mom. I'm like, all right, fine, take it. But yes, it's going to be trading at $68.54. So $68.54. Now, again, it's cost prohibitive to get in at what? $3,400. Who's going to buy any stock of that? Right? And again, stock splits is because the stock is so high that the average consumer cannot get in anymore. And so therefore the company will split it to make it more advantageous for the average person like you and I to buy from them so that they can actually make more money. Because the whole reason for being on the stock market is to basically fundraise. It's hard to fundraise when your stock is $3,500, right? But if your stock is $69, now we're talking, right? So this may be another one you want to consider. Now, because the stock is splitting all the way down to $69, $68.54. Thank you again, Lynette and Tawana. I appreciate y'all math geniuses over here, right? Because the stock is splitting all the way down there, I probably wouldn't do the second play that I told you all about for Avgo, okay? Because it's so high. The stock is $3,400, almost $3,500, right? I will probably just wait until it splits to 69. Now you can buy a lot of stock, right? I'm probably spend $3,400 worth of Chipotle anyway, right? I probably would spend, maybe a couple thousand at the most, maybe a few hundred. I don't know. I got to think about it, right? So I'm not going to spend that much anyway. So I wouldn't buy now and wait for the split. I would just wait for the split. But that's happening on June 25th. Okay. So just keep this in mind. Stock splits happen all the time. Well, they're not all the time. They're actually less common now than they were years ago. But when they do happen, they can be super, super great. You can get in on this. So you may want to consider putting maybe a little bit of money into Chipotle. Maybe. By the way, I have to caveat this. This is not financial advice. This is for educational purposes only. I'm not a stockbroker. I have to say that for legal reasons, but this is what I do. Okay. So Chipotle is another one you want to look at. That's happening June 25th. Avgo is happening July 12th. Now, when it comes to Chipotle, maybe you want to do that, maybe you don't, right? Like retail is changing, right? Retail is changing. So retail sales are not as up as they were, before, especially for companies like Ulta, which is on the stock market, or Walmart, or even Target, right? Those companies are having some challenges because things have changed since the pandemic with how customers are approaching retail sales. But everybody got to eat. We eat multiple times a day, right? So it's like, maybe Chipotle is the move. I really haven't decided yet. I have to decide, and I will let y'all know what I'm going to do. But I am going to buy something. I just don't know what it is. I don't know how much it's going to be. Another stock that has not announced a split yet, but seems like they might be thinking about splitting, is Microsoft. Now, if Microsoft splits, y'all got to get Microsoft. Microsoft is like $500 some now. I have some Microsoft. Actually, I have that in my HSA. But it's $500 and some change a month. I mean, a stock. But if it splits, it's going to be really good to get, because that's a blue chip stock. Blue chip stocks are stocks that traditionally they do well. They always do well, and you're always going to make money on it. So we'll come back and talk about that later. But thank you, Danita. Danita is the girl. Danita said Gwen is 130. She know I said I got to be somewhere at 145. I appreciate you, because I can get to talking. I get excited about this kind of stuff. So thank you, Danita, for keeping me on track, because I do need to drive to this appointment that I have to go to. So anyway, bottom line, you guys, your homework for today. Thank you, Danita. Your homework for today on Instagram and on Facebook, or YouTube. One is to follow me and subscribe to me on YouTube. Click the subscribe button and hit the bell for notifications. Number 2 is to go to the Facebook group and join it. Okay. We're going to be doing the Fix My Finances Challenge. Fix My Finances Challenge in July. It's free. It's only 5 days. Fix My Finances Challenge. Okay. We'll dive more into some of this stuff. And the third thing is that if you already have a retirement account or any sort of money in any sort of brokerage account, I want you to pull your statements. I want you to do that this week. Okay. And I want you to look at that statement and get familiar with it, understand it, try to make sense of it. If you don't get it, that's fine. Bring it to the challenge that we're going to do in July. Okay. But just pull your most recent statement from every single brokerage that you have. Okay. So that you can start to understand what it is that you're invested in, or even if you're not invested. Okay. In the meantime, your fourth thing to do is to decide how much you're going to invest into Avgo come July 12th. All right. Thank you all so much for watching me. I would love to stay on longer, but unfortunately I have to go to this appointment at 1:45, or this meeting at 1:45. I got to go. Otherwise we'll be on here for another couple hours, but I love y'all so much. Thank you for being here with me today. Do you have to have a business to join the Facebook group? No, you do not. No, you do not. A lot of people do, but you do not, Lynette. So go ahead and request access. All right. Love y'all so very much. Have an amazing day. You are so welcome, Letitia. Have a fantastic day. And I hope, it seems like this was very helpful for you guys, and also explained in very plain language. Okay. And that is what my goal is here, is to give this to you in plain everyday language so that you understand it's not that complicated. But the world has made it complicated for us. Okay. But it's not. I'm going to teach it to you in real simple terms. And those of you who are from the Naturalicious Nation, thank you for being here. Thank you for always supporting. I feel very honored that I have, spent years helping you guys with your hair and getting it to where, you love what you see in the mirror. And I'm super duper excited to help you with your money as well now. Like, we just going to be fine and fabulous and boss chicks and boss men all around. I just love it. Yes, Danny, we about to get that FU money. I promise you, I'm going to make a t-shirt and say FU goals, FU money goals. Make it for y'all. All right. Have a good night or good day, everybody. Go pull your statements. Pull your statements today so you don't forget. Okay. Love you. Mwah. Have a good day. Bye.